a lot of founders think about their options. They think about either a full exit or full buyout by an institutional investor or a strategic, or getting debt, right? But what you're saying is there's a bunch of different options in between. So help illustrate that, like, what are those different variations?
Look, the capital markets are incredibly efficient. There's no shortage of capital in the economy and in the market here. Typically, when you're an owner and you're thinking about where do I get capital, you're thinking the two bookends. There's the traditional equity markets, could be growth equity, could be buyout, as you said, or traditional credit markets, which, is really two forms. There's the commercial bank, and then there's, increasingly private credit funds. In particular, the market segment that we focus on, what those management teams often think is, I either need to sell my company to a private equity firm, but I don't know if I really want to do that. I've got more in me. I want to keep running my business. So I'm not really interested in a buyout transaction. And if I'm talking to a growth equity firm, I want to own as much of my business as possible because I really believe in the thesis I'm going to be building. I don't want to give up 30, 40, 50% dilution to a traditional equity fund. And likewise, on the other side, maybe they can't get all the availability and all the capital they need from a traditional commercial bank. But we also have a lot of discussions with management teams who are just skeptical of private equity and the term private equity in general. So, our starting point of that discussion of we're a little bit different in terms of our approach. We're investors, right? We ultimately want to partner with teams and get returns for our investors, and that's ultimately the business that we're in. But there's different ways to approach it. For us to come in and say, we don't have a preconceived notion of whether you should have debt, whether you should have equity, what it looks like. You tell us what your hot buttons are, right? Do you care more about dilution? We can craft a more credit-oriented investment solution for you. Do you care about flexibility and limited covenants? Okay, well then we can have maybe, a little bit more of an equity or a flexible type of solution. So it is a different approach. Oftentimes what we hear from the teams that we talk to is, hey, that's pretty refreshing. There are times when intermediary or an investment bank may come to us and say, hey, this business is raising this much equity for these purposes. And we say, we can do that, but wouldn't it be better for them and maybe better for the company if we thought about this a little bit different? And that also is, I think, a breath of fresh air for a lot of